All right, let's get right into it. Today we're diving into a real-life, high-stakes tax story. And I mean, this isn't some textbook example. It's a true cautionary tale of what can happen when you get seriously behind with the IRS. And the numbers, well, they get huge.
Okay, and what tax years and tax year firms are we going over today?
Yeah, 20 tax year 2020 to 2024 that we have balances due that should be assessed by now for all of those years.
Okay, I'll be full 5 minutes or so researching the account. I'll be right back.
Sounds good, buddy.
So, the big question is, how in the world does a tax bill get to be nearly 130 grand? Let's pull back the curtain and see exactly how this thing snowballed. Okay, so take a look at the breakdown. It's not like it was a slow and steady climb. You've got a couple of years that are, well, they're big, but then, bam, look at 2023. Almost $70,000 in 1 year alone. You tack on the estimated amount for the year that's still processing, and suddenly you've blown past that six-figure mark. It just goes to show you, one really tough year can take a manageable problem and turn it into a full-blown crisis. And, as if that wasn't enough, it wasn't even a simple process of just filing late. At one point, a whole year's return had to be mailed in twice because the first one just vanished. It got eaten by what the tax pro in this story calls the IRS paperwork machine. It's a perfect example of how sometimes just navigating the bureaucracy is half the battle.
According to the balance going account is $105,122.48.
Okay, yeah, that's okay. If is it possible to just kind of break that down year by year?
Yes, sir. Tax year 2021 has a total
I
balance.
just hold on. I need to catch up to you. Just one second. Okay, tax year 2020.
Tax year 2021 has a total balance due of $23,166.30.
Okay.
Tax year 2022 has a total balance due of $12,721.36. And tax year 2023 has a total balance due of $69,234.82.
Okay, is 2024 showing?
I do not see 2024 as of yet.
Okay, 2024, we filed okay, yeah, we just filed 2024 on October 15th. But 2024, we have a principal balance of $21,000. So this is going to put this taxpayer over 100 grand, about just shy of 130 once 2024 gets assessed on your guys' end. So do you foresee this going to a revenue officer, or do you think this is like a 433D would be able to get approved?
Now, when you owe this much money, things start to escalate. We're way past just getting sternly worded letters in the mail. At this point, the game becomes trying to stay off the radar of a very particular kind of IRS agent, the kind of person you really don't want to meet. And that person is called a revenue officer. Okay, so what is that? Think of them as the IRS's heavy hitters. They aren't dealing with your average everyday tax issue. Nope. They get the big, complicated, high-stakes cases. Their one and only job is to make sure the IRS gets its money. So, what can a revenue officer actually do? Well, this isn't someone you just talk to on the phone. They can literally show up at your house. They can show up at your job. They can find you out in public. They can start taking an inventory of your assets, your car, your boat, you name it. It is an extremely intense, super stressful process, and it's all designed to do one thing: collect that debt.
We would be able to set up an installment agreement yet, but I do have to go ahead and let you know that we would have to file liens for the tax years.
Yeah, I mean, there's election returns. Yeah. Okay. So we just got 2024 filed. Is it possible to just get a hold on this so that way I can go back to the taxpayer with this updated balance and then figure out an installment agreement balance and get back to you guys?
Yes, sir. Give me about 3 to 5 minutes. One time some quick notes and get a small hold up.
Yeah, I appreciate that, sir.
Thank you, sir.
All right, so even if you manage to avoid a revenue officer knocking on your door, a debt this size automatically triggers another massive problem. This one puts a claim on pretty much everything you own. It's called a tax lien. What is it?
Basically, it's the government's legal way of saying, hey, that property you have, we've got a claim on it now. It attaches to your house, your car, your bank accounts, anything of value, really. It's like the government is putting a giant sticky note on all your stuff as collateral. So let's just cut through the jargon. What does that really mean? It means if you can't make your payments, the IRS can take your stuff. Period. It's their ultimate trump card to make sure they get paid.
So I do have to ask the call back by the 28th for resolution to the account for a large amount due. We don't want this going further. It looks like it might put a hold on it from next week. At the same time, I want to let you know that if the account could actually go ahead to the amount due, get moving into collections a bit faster. Okay?
All right, I'm just documenting this on my end.
It's been a week, so we can go ahead and get something set up for the taxpayer. That way they don't fall in the collections. Okay?
Understood.
Okay, so you've got the threat of a revenue officer on one side and a lien on all your property on the other. It's a pretty scary spot to be in. So what's the escape hatch? Well, the whole idea is to get proactive and set up a formal plan before the IRS makes the next move. You're basically standing at a crossroads. Path number 1, wait for that revenue officer to take control. That's the super stressful, invasive route. Path number 2, you take control yourself and file for a formal installment agreement. I mean, when you look at it that way, the choice seems pretty obvious, right? And that second path, that formal plan, comes in the form of something called a Form 433-D. That's just the official name for an installment agreement. And look, this isn't some casual promise. It is a legally binding contract with the IRS that says you'll pay off that huge debt month by month over a specific amount of time. It's the official road to getting this thing resolved.
Okay, thank you very much for your help here, sir.
All right. Thank you, sir. Have a wonderful day.
But here's the catch. Getting on a payment plan is the solution, sure, but it doesn't make the debt just poof, disappear. This solution, it comes with a very harsh, very real price tag. So let's talk about the cold, hard numbers of what it actually costs to catch up. First up, just to handle the old debt, that nearly $130,000, the monthly payment is estimated to be around $2,000. Think about that. That's basically a mortgage payment or a really high rent payment every single month, just for back taxes. And this isn't a short-term thing. We're talking about a payment plan that will likely stretch out for 75 months. That is over 6 years. For more than 6 years, you're writing a $2,000 check to the IRS month in and month out. Oh, but wait, it gets even better. Because you can't forget you still have to pay your current taxes. So when you add what this person owes for the current year on top of the back tax payment, their total monthly bill to the tax man is actually closer to $3,000 every single month. Let's put that in perspective. To have $3,000 a month just for taxes, you need to earn more than $40,000 a year after all your other deductions. That's an entire salary, basically, just to pay the IRS. The financial pressure here is just immense. And all of this brings us to the final, and maybe most important point. It's the final warning, really. Yes, the payment plan is a way out, but it's not an easy path. It's more like walking a tightrope, and there is absolutely no safety net. See, this person has to make it work. There's no room for error. If they miss a payment, if they come up short, they fall right back into what the source calls a real messy situation. And that's when the case is probably going to land right on the desk of that revenue officer they've been working so hard to avoid. So really, it all comes down to this one final thought, and it's a powerful one. Anybody who says you can get around paying taxes clearly doesn't know what they're talking about. This whole story is just a crystal clear reminder that trying to ignore the IRS isn't a clever strategy. It's just a direct path to a much, much bigger problem down the road.